Hi, Stephen here from Forex Wealth. Today's lesson is going to be a follow-up on the previous lesson's trade setups using the Dashboard Correlator and Trend Volatility Indicator. I'm just going to be addressing some questions here that most traders ask, and that is, what should I be trading? So what currency should I be trading? When should I be trading? Where's the market moving? What is currently causing the movement in the market? And what are the highest probability trades with the least amount of risk associated with it? And lastly, where do I enter and exit the trades? Okay, answers to this. Basically, what you want to be doing is the currencies that you want to trade are the currencies that are moving away from each other. Essentially, they're diverging. And you want to be able to measure the rate at which they are moving away from each other. So the quicker the rate that they're moving away from each other, the higher your chance of success on those trades. You then want to be monitoring the markets prior to periods of high volume trading and volatility. So prior to big moves, when markets are opening, etc., you need to be monitoring the market when it's in consolidation mode. So that'll tell you when. Now, where the markets are moving, what's causing the markets to move. You want to be looking at comparing multiple currencies and correlated markets to get an overall view of the entire market, not just the FX market. It's very important to be able to look at the stock market in conjunction with commodities as well, as that drives the FX market. Right, so you also want to be looking at entering into trades that are showing consistent price momentum in the direction of the overall larger trend and time frame. So if you're trading specifically with the trend, that's what you want to be looking at. And then you want to have a system that has clear defined sets of rules based on a system that's been tested extensively. You don't want to be using some system that's just been around for a couple of months. You want to have something that's tried and tested and has a minimum win-loss ratio of above 60%. And lastly, the most important, above all, obey strict money management criteria and exit according to the rules of your system. Okay, so all said and done, how do you achieve all of this? The simple answer is identify a system that works for you and that meets all the criteria that we've outlined. And I'm going to demonstrate to you today that the dashboard is a system that meets and exceeds all of those criteria. Now, firstly, what do you want to be trading? Okay, what currency should you be trading? Right, the dashboard correlator clearly defines the rate and the momentum that currencies are moving at on multiple time frames, and we'll go through some examples. I'll show you exactly how it works. When do you trade? In my experience, the most explosive moves come on or before market opens and news events, obviously. So you want to be monitoring the markets before these explosive moves take place. So you want to monitor them 30 minutes before the Frankfurt Open. That to me is the best time frame, the best time to actually be monitoring the market, and then for an additional, say, 3 to 4 hours after that. In my opinion, those are where you're going to be making the most amount of pips. If you can't trade that session, then trade the US session, but you want to be in 30 minutes prior to the US Open. Right, finding out how what's actually moving the markets. The dashboard correlator clearly defines that as well with intermarket correlations. It gives you an overall view of what's moving and what's causing those moves in the markets. The dashboard correlator also shows you where the momentum and price action is and how it's moving and how consistent it is. And if it's in line with the larger trend, is it displayed on the higher time frames so that you can see if you are trading with the trend. Now, the actual system, the dashboard system has clearly defined entry and exit rules, and these will be explained to you as well as I've gone through in the last video as well. We went through the methodology, and it has a win-loss ratio of over 65%. It's been tried and tested over the last 2 years. I've refined it, and now I've come out with the latest version, which is the Dashboard Correlator. Last but not least, and the most important, is your money management. Money management is the key to any successful trading strategy. If you don't have money management, you actually have nothing, and you will fail, I assure you. So the dashboard focuses very heavily on this side of things. I'm just going to go through an example here of some charts. This was the Euro USD 5-minute chart and the Pound USD 5-minute chart on the 13th of October. Now, just by looking at these two charts, you would think, well, they're pretty much the same. They were heading up against the US dollar, similar amount of pips to be taken. Which one of these two should I have traded? By looking at them, you would never know. But by using the Dashboard Correlator, you would see that the clear case of which currency to trade based on a set of simple rules, and also the lower risk trade, because both of these you would have made profit, but which was the more risky one? Here we can see this is where the corresponding Dashboard Correlator started off from that chart, the charts that I showed you, and you can see here that the pound was very weak to start off from. Okay, the euro, however, was a lot stronger than on all time frames than the pound. And what was it selling off against? The yen and the US dollar. You could see, especially the US dollar was a lot weaker. So that would be your focus. You'd want to focus on the what's happening on the euro as opposed to the movements on the US dollar and the yen. You could obviously look at other currencies as well, like the Aussie and the CAD. But I chose to. It all depends what you like to trade. So it's up to you. If you like trading the Aussie or the CAD or any other currencies, use the same principles. Obviously, all of this is done in conjunction with looking at the charts. So you're looking at the Dashboard Correlator and then the associated charts and how it's moving in tandem with that. Now we see the pound selling off. This is 10 minutes later. The pound selling off heavily, but what's it selling off against? It's only the pound that's weakening. The US dollar isn't getting much stronger, and neither is the yen. So it's not a valid trade. The euro, however, is getting stronger, nearing those 150 levels that we spoke about previously on the index here. The US dollar and the yen also closing in on those 150 levels. Here you can see pound selling off massively, but not any major moves or strengthening on the US dollar. The euro, however, now is showing a lot of strength. So you probably would have entered already, depending on what you were seeing on your chart, the inside bars and the breakouts. Okay, so we're zooming ahead now. You can see it's euro is now strengthening, US dollar, especially the US dollar, weakening significantly. This is now an hour 20 later, and the euro, the yen is now a lot weaker. US dollar is still weak, so you could have entered on either or. Okay, this is now 3 hours, over 3 hours, 3.5 hours later. The euro is starting to turn now. You can see on the lower time frames, and the US dollar is getting slightly stronger on the 1 minute. Over here, euro still weak on the 1 minute. 5 minutes, it's not too bad. It's dipping below the 0 mark. US dollar still not strengthening much. Okay, and here we're starting to see the US dollar strengthen, and it's now above the 0 line, and the euro is weakening even more. Okay, euro still weak. Okay, and here we're seeing, just want to go back here, we're seeing this is on the open of the London session. US dollar weakening massively on the open, and the euro really starting to strengthen. Okay, and the strength continues an hour later. Massive gains on the markets across the board. Big numbers over here showing lots of volatility, causing the US dollar and the yen to weaken heavily, and the euro to strengthen massively. Okay, I'm just going to show you a strategy tester. This will just move the market so we can see how the market reacted on those days, or how the charts reacted. Okay, and you can see it's as it's moving over there, long signals, inside bars, still continuation, and there it's showing you a sell there, continuation, some sell off over there, sell, buy. I just want to stop it there. Now the thing is, on these sells here, you would have to look, was the euro sell in line with the longer time frames? If so, you could have looked at going short, say on the 4 and the 4 hour and the one day time frames. Was it in line with those time frames? If not, then you would stay out of the shorts. Okay, this is the next day. Look at that, not really nice move there. Okay, what I want to show you is here. You would have got in there, this inside bar. Okay, you could have got out over there. That would be 62 pips, but there wasn't a reversal signal there. So that would have been your first exit point if you wanted to exit there, or maybe a partial exit. Here it still carries on. It's still valid. Okay, and there's your first exit signal over there. Okay, I want to just show you a move on with the pound against the US dollar. And there you can see, nice move up. This is on the 14th of October. Inside bar forming. Okay, still valid, long. Okay, and there you've got a sell. Okay, then I want to just show you a last one on gold, spot gold. This is from August on a daily chart. Alright, so you can see how effective it is. Look at this, all long signals from the beginning of August. No sell signals, all daily charts here. Look at it, just continues up, continues going, and this move from about the 9th of August till now, the 14th of October, 180 pip move. So as you can see, a very effective system. I think we've addressed all of the questions, and I've demonstrated to you how effective the system is. It gives you a lot of profits for a small amount of risk and a high success ratio. So we'll be going through more examples later, and I will be showing you precisely how you can use these tools to enter and exit your trades. Look forward to speaking to you soon. Bye.